Still on the SME sector, for it to make increased contribution across economies in Africa, increased access to finance is non-debatable. On our Pacesetter segment this week, I caught up with Felix Bikpo, CEO, African Guarantee Fund, an organization aimed at increasing access to finance for African SMEs. Thank you for joining us, Felix. Now, the African Guarantee Fund was launched last year through African Development Bank. Tell us more about this initiative and what it seeks to address.
The African Guarantee Fund was an idea of some European governments together with African Development Bank. The idea behind is to see how we can direct the resources existing in the African bank to the real sector, the SME sector. Why? Because we believe that the real engine of growth in Africa is the private sector. But when you look at the private sector in Africa, is more than 80% composed by SME. So if you want really to touch the development, you want the private sector to be the engine of the growth, we have to help the SME business.
How does the fund operate and how is it expected to have a scalable impact on the SME sector?
We go where the resources exist in the banking. In Africa today, most of the resources are in the banking. So this is our role to give, again, the necessary comfort for them to touch their SMEs. Look at the balance sheet of African bank. Mostly all of them are in the biggest institution, making the regional and Pan-African institution. So by going to this institution, because of the size of the channels that we have, we can reach the biggest part of the SMEs in Africa.
Now, speaking of banks, there's been huge concerns when it comes to administration of such funds, with banks allegedly making huge interest incomes from such funds owing to wide spreads of interest between the lenders and the SME sector. How do you address this?
The SME sector, we agree, is a very risky sector. That's why the bank is factoring this risk in the interest rate. It's normal. The pricing is a component of risk. And this is why the interest rates served to the SMEs are too high. And the overall interest rate, I call it the overall interest rate also, is very high because the SME, most of the time, don't have the capability, the possibility to provide acceptable collateral. So by us coming, we give comfort, yes, to the bank, but we reduce also the overall interest rate that is being served to the SME. So reduce the cost, I can call it the operating cost of the SME by reducing this interest rate. Why? If today you go to see a bank, interest is being maybe at 20%, in addition to 200% of collaterals that they request from you to be able to get your loan in place. This 200% can be reduced to 100% now, taking into account our guarantee. And that's very interesting for the SME and help them to better use their liquidity.
So far, which are your key focus regions and why these regions?
As a company, we want to go gradually, and we decided to go to start by 9 countries. These 9 countries only because we did our feasibility study on these 9 countries. So it makes sense to us to start by this country, but we cover the entire continent. Today we're receiving requests from anywhere, everywhere from Africa, and we're taking this request. But in terms of marketing, we do it per phase. Phase 1, this 9 countries. Phase 2, we add some other country because our whole out plan is based on a regional strategy. So we take into account now what we call the leading economy of each region, in addition to some country going around this leading economy. So by year 2015, you'll be able to be in all Africa.
Your share capital currently stands at $50 million and you hope to increase this tenfold to $500 million in the next 5 years. How do you hope to raise this capital?
Easily. This 50 million was what we call the original capital. It's just to make sure that we set up the fund, but it's a $500 million fund. And this will be based mainly on some donors, DFI, Development Financial Institution, some government, European, US, or African government, and mainly these are our targets. And today we believe that by the end of this year, this capital will raise $150 million, will reach $150 million, and by next year we'll be at $300 million making possibility to make $200 million by 2016.
Other than finance, which is a key concern for most SMEs, which are some of the key challenges that are unique to SMEs in Africa and also across the board?
In Africa, the challenges, I call them obstacles, are huge. Regulatory environment needs to be clearly set. Access to market is an issue. Infrastructure can be a big issue, it's an issue. And access to finance is what we are working for. The third one, the three first one, the governments are working on it, and some DFIs are working on it to make sure that we have an acceptable environment for the SME. The access to finance is the one we are working on, making sure that, again, as I said, the monies that exist in Africa and the one who's coming to Africa are directed to SME business. If this access to finance is properly handled, I think our SME can play the role of engine of the growth.
And finally, Felix, through such initiatives, how do you envision the transformation of the SME sector and its contribution to economies across the board?
The number of SMEs that we have are big enough to be able to create the surplus that we need, to create the consumption needs, to create the offer and the demand together to make sure that all the parameters of the economy are going on the upside. The only way to do it is by SME. Why? Because SME is creating the offer and is encouraging the demand by helping to create jobs. When you create jobs, you create wealth, and people have a possibility to consume. And this is how, generally, just to make it simple, the economy is moving out.